Well, we have been acquiring and optioning high grade precious metals and critical metals deposits in what we feel are good, solid jurisdictions around the world.
Hello, you're watching Proactive. I'm joined by American Mineral Resources CEO Ryan Cunningham. Ryan, very good to meet you. For investors new to the company, could you tell us a little bit about American Mineral Resources?
Sure. So AMR is a wholly owned subsidiary of AMLM, which is traded on the OTC in the US. As a wholly owned subsidiary, we're involved in now 12 projects in various 7 jurisdictions at varying stages of exploration and production. So we are a microcap. Um, but we have been acquiring and optioning high grade precious metals and critical metals deposits in what we feel are good, solid jurisdictions around the world.
VanEck has flagged a $50 billion funding shortfall for miners pivoting into AI. Is this a case of overpromising, or is the capital simply not there?
Well, I think, and this is just my opinion, but obviously the sector has sucked up an enormous amount of capital, um, and a lot of it has come through private credit, which a lot of people feel is kind of getting maxed out. And it's also pulled a lot of capital away from traditional industries, which even into mining, oil and gas, natural resources in general. Everyone has kind of felt this gravitational pull of capital away from just about everywhere heading into AI. I mean, some of the numbers that these companies have raised is staggering. It's not that we don't believe in the technology, we do, and there obviously is use for it, and it's at the beginning of a new industry, but the capital burn has been unbelievable.
Signing an AI contract and delivering on it are very different things. Where are the biggest execution risks?
Oh, with AI, I think the biggest risks are over, as with any industry that's come along back in the 2000s, late 90s, was the internet and fiber optics. Everyone built what was basically too much train track. And for a while there, the capacity just wasn't needed, and things get ahead of themselves, but that's human nature and that's the market. But you can definitely feel that these giant capital raises and step ups in valuation, it would be hard to see that continue without some sort of pause or maybe some backing and filling.
Ryan, you come from a resource development background where large-scale capital projects are notoriously difficult to execute. What lessons from mining apply directly to digital infrastructure pivots?
Oh, well, I guess from actually what I was just saying, I mean, you get into these projects and let's say you have some new drill holes and they're fantastic and high grade, and it's the next big story, but as soon as that hype dies down, you have to raise capital, which can be very challenging, which circles back to what I said before about a lot of capital being sucked into the AI infrastructure market. But also, you've got these jurisdictional risks, permitting, and these things can delay a mining project for many years and cause your financing to freeze and things like that. So, you get into these situations where you've got a great some great results initially and a big bang from a press release, but you really, really have to have not only some capital discipline, but a strong strategic capital raise program going forward to make these things work. And that I didn't even touch on commodity risk. As of late, obviously, whether it's precious or critical metals, there have been huge fluctuations, and that can make or break a model as you're going. So there's a lot of factors involved for sure.
Ryan, where are you seeing opportunities for American Mineral Resources at the moment?
So recently we announced that our Piscal North project, polymetallic project in Quebec, we are going to spin that out into a publicly traded Canadian shell. And this is where we saw the opportunity. A lot of the money that's being raised for microcap juniors and juniors right now has really been through flow through shares in the Canadian markets where the tax incentivized um, specific to that market. And in all truth, we found that it's easier to raise capital for mining in Canada under those tax benefit allocations than raising money in the US. And we've seen other companies executing this. They'll raise money in Canada and then shift back to the US and uplist to Nasdaq. It's interesting, but that's what the capital markets are forcing juniors and micro juniors to do.
Well, Ryan, I hope you'll keep us updated with your progress. Very good speaking with you today.
It was great talking to you, Stephen.
That's Ryan Cunningham, the CEO of American Mineral Resources.